What is up, YouTube? I'm Ace Palomero. I'm a realtor here in South Texas. I'm a proud son of the Rio Grande Valley, and I'm someone who needs to start going back to the gym more regularly. I'm getting a little bit of a panza here in my midsection. But anyway, today's video is mainly about the open letter that the National Association of Home Builders, the National Association of Realtors, and the Mortgage Bankers Association have sent to the Fed Chairman Jerome Powell. Basically, a little bit of the tea with the real estate industry, and we're also going to go over some of the major housing stats in my local housing market here in the Greater McAllen area, and the potential implications for the real estate market here. So let's get this rolling. So on October 9, which is just last week, the Mortgage Bankers Association, the National Association of Realtors, and the National Association of Home Builders all got together and wrote to the Federal Reserve Chairman, Jerome Powell, asking him to do two things. And the first is to not sell any mortgage-backed securities until the financial markets have stabilized, and that's a topic for another time. But the second, and one I want to focus on this video, is to not increase the federal funds rate anymore for 2023. Basically, the federal funds rate is essentially controlled by the Federal Reserve, and it affects all rates, including mortgage rates. So, yeah, all three of these associations are citing, I guess, the uncertainty of the housing market and the concerns with it. They're talking about mortgage rates being at a 23-year high, and mortgage originations not being this low since 1996. They talk about the housing unaffordability crisis, and basically shelter being a large chunk of inflation. I think for July it was 90% of the inflation for the month of July this year. And though it seems like in this letter they're all citing concerns for the consumer, us, but another way to look at it, at least in my opinion, is that all these associations and the industries that they're in are hurting, right? Yeah, so National Association of Home Builders, yeah, basically the people who build the new construction homes. The National Association of Realtors, the salesmen of these homes, and the Mortgage Bankers Association, basically the companies that write the loans so people can buy homes. So if I'm a consumer, right? And I'm looking at this letter that all three of them got together to write to basically the person who controls, or largely controls, like what the rate is. I'm thinking that all three industries are hurting. Now, these headlines are from, two are from today, one's from yesterday. It's from Fortune.com. The housing market is about to have its slowest year since the real estate bubble burst in 2008, according to National Association of Realtors. We have another one from CNBC. Home builder sentiment drops to a 10-month low as mortgage rates soar. This one is from Redfin. Home buyers must earn $115,000 to afford the typical U.S. home. That's about $40,000 more than the typical American household earns. Even here in the Greater McAllen area, or the McAllen, Edinburg, Mission, MSA, or Metropolitan Statistical Area, we're hurting a bit too in the real estate industry. Except for the month of September, it's the only month that had an increase in closed sales for the McAllen, Edinburg, Mission, MSA from January up until August for this year. For year over year, closed sales each month had a drop in the percentage of closed sales when you compare it to the previous year. So even if the median price has been, at least the median price year over year has been going up, the cumulative days on market has also been going up. The number of active listings have been going up. The months of inventory have been going up. And the number of closed sales have been going down. And just looking at this or these data points, I think it might be next year where we actually start seeing a little bit of the price correct. Now, let me be the first to tell you, if no one else has, that anybody who's in the real estate industry who says that prices only go up and that the best time to buy is now and you should buy now regardless of your specific financial situation, they're lying to you. They're full of it. They're trying to just make a commission. And let me show you here. This is the house price index for the McAllen Edinburg Mission MSA. House price index basically is showing you the direction in which and it's weighted, which the average house price moves. So hopefully you can see my mouse. The gray bars, they denote economic recessions. The last one was the Great Financial Crisis, 2007, 2008. So what do we see here? 2007. Oh, that's price movement down. And then if we go all the way, we can have got a little blip, which the 2000 or 2020 wasn't a real recession. But we can see how much the prices have moved up in the past like 5 years. That's looking a lot like a potential bubble. I don't know if price will necessarily crash down here in the valley, but I think it's safe to say that even as early as next year, like I think for sure in the next couple years, prices will likely start correcting. I don't think we're necessarily going to see like a 50% price drop, but if over the next, let's say, 3 to 4 years, prices come down from peak maybe 10, even 15%, that's pretty good. Now, I want to look at the local housing market over the past 5 years, and I've generated charts using the local MLS data, and I set the parameters from 2018 to 2023. The property type is residential, so single family houses, and the counties or the area just Hidalgo County. And the ones I want to point out, or the statistics I want to point out, is CDOM, or cumulative days on market, obviously median price, active listings, and new listings. And I want to compare like the month specifically, so we're going to use July because that's usually the hottest month of the year. So for median price in July 2019, it was about 1,000 or 158,000, and 2023 for July it was 232,000. For CDOM, cumulative days on market in 2019 we're at 119 cumulative days on market for each house that was sold. In July 2023 it was 87. For active listings back in July 2019 it was 2,201, and for 2023 in July, we were at 1,800. Now, the one that's interesting is number of new listings for the month of July for 2019 and 2023. Back in 2019, in July, there were 537 new listings for the whole of Hidalgo County. And this year in July, we had 663. And actually, in September, it was even higher than that. We were at like about 780. So we actually had this year more new listings than we've had even pre-COVID. So I'm thinking if the days on market and number of active listings start creeping closer to pre-COVID levels, or that increases the likelihood of a housing market correction coming here in the area. That being said, here in the Rio Grande Valley, we're still in a seller's market. The last official data for the McAllen-Edinburg MSA was our months of inventory for September was 5.5 months. Typically, we consider 6 months of inventory a neutral market, 5 months or less a seller's market, and 7 months or more a buyer's market. If you've been considering selling your property or your house, probably the best time to list it was honestly, the best time for both time, I guess, to sell it quickly and to sell it best price was probably like spring 2021 or spring 2022. But for this year, probably if the market corrects like in the next couple of years, the best time would have been like around March of this year. I mean, that doesn't mean it's too late to sell your house and get a decent price for it or a good price for it. It just means that you're not going to be getting the same number of offers that sellers were getting in 2021 and 2022. And if you're a seller, just in general, the most important thing really is making sure you price your property correctly. And a competent real estate agent, if you're looking to work with one, they should be pointing that out. And they also shouldn't be so readily agreeing to your or to listing your property at a certain price if that price is too high relative to the market. And real estate's super local. Like the most important thing when it comes to appraisals is the prices of the comps. Basically, similar properties in that subdivision. This last part's for potential home buyers. So, going off the median house price for the McAllen-Edinburg MSA of $246,988, we're going to throw that into the mortgage calculator, and I'm using calculator.net. So, assuming a 3.5% down payment, loan term of 30 years, interest rate at 7%, assuming you have good credit, which is wild compared to what the interest rate was in 2021, right? And property taxes, we put it at 2.5%. Home insurance at $2,500 a year. PMI, private mortgage insurance, which would be MIP or mortgage insurance premium for FHA loans at 1%. We're going to assume no HOA, which is probably not realistic because a lot of new houses are built in neighborhoods that require you to join an HOA. But once we hit calculate, we're going to be at a monthly payment, actually the mortgage payment of $1,585.70. When you throw in property tax of just over $514 a month, plus home insurance of $208 a month, or just over $208 a month, and the PMI of just over $205 a month, you're looking at a total out-of-pocket payment of $2,514.42 a month for the median home in the area. So that's something to consider as a potential home buyer. Deciding when is a good time to buy or even to sell, like, that's for you to decide. As a realtor, assuming that we sign that agent and client agreement, my job is to basically provide you with the information and guide you. But as for making that like ultimate decision on pulling that trigger, That's really all on you. Um, Other than that, that's it for the video. If you found anything useful or even entertaining in this video, like, share, and subscribe. Bye.